Good morning, trading world. It is August 17th, 2022, 7:57 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. All right, we all saw it about 2:20 p.m. Eastern Standard Time yesterday. Was that the end of the rally? I can't confirm or deny it just yet, but let's welcome back some two-sided trade. At the time, there were critical things I looked at yesterday that did not confirm. But this morning, they're saying something different. Also, yesterday, just before all of this happened, I made a comment on Reddit. The comment goes, "We're closing in on capturing an overhead imbalance that was established last Wednesday. I am starting to come around to the thought once this happens, we can start to see a near-term top or the beginning of a pullback that will take 3 days to completely get started. Wednesday will be the reversal start into Thursday, and Friday will be another steamroller bull rally with a huge gap down on Monday." End quote. Now back to what I saw yesterday. The first thing I looked at was volume. And let's go down to a 5-minute chart. And looking back at yesterday, this is about 2:20 when it started. Now, we got a volume spike. As you can see, I really believe in paying attention to the average, but we were trading below average and we got a volume spike. But at the time, nothing of importance. It wasn't large enough to really make me think something major was happening. Yeah, I usually look for volume spikes in upwards of 4,000 to 5,000 contracts per minute on the NQ and a lot more on the SPY. Next, I looked at the VIX, and it didn't get excited very much. In fact, 40 minutes later, we were back to trading on the floor of the VIX, basically. However, this morning, if you watch, let me bring the VIX up. All right, here's the VIX about that time yesterday. As you can see, we had a decent little spike up, but it was still right around the 20. We still have barely gotten up off the floor, and then promptly after, we go right back down to the lows. So nothing really prompted me to say that it was really important at the time. But if we go to VIX futures, this morning tells a different story because we have a huge gap up in the VIX futures. So now VIX is woke and we have a pulse again. This is good for me since I have a decent sized position in the VIX right now. I don't know if you remember, but a few weeks ago I said in the middle of this rally, since I can't get short and it really wasn't any pullbacks to get long off of the few long positions I had or to add to them, I was going to take advantage of the VIX by building a decent number of $10 wide call spreads out to late September and October. Now, in the quote yesterday, I gave how I thought this would play out. However, yesterday we got close to covering the imbalance left on last Wednesday, but we ended up not getting there. This gives us an excuse to try for another bull march on Friday. This could happen and take us all the way to 433, or get it interrupted halfway there to go revisit or push to lows that we make today or Thursday. But the absolute key to all this is looking for a divergence or unconfirmed high on a larger time frame. A divergence in price and internals and or indicators. Price makes a new recent high while internals and or indicators does not. This is a bearish divergence and the best sign for a reversal. Let's get into the key levels to watch for the day. All right, here we are back with the key levels to watch today. As you can see, it's pretty much the same as yesterday. It's not much of a change, but let's go through it again. On the resistance side, we have our jack resistance at 428 to the 429 area. Then on the queen resistance, we have the 430 to the 431 area. And then the king resistance, 432 to the 435 area. The 433 in here, I believe, will play a key part on Friday. Now to the support side. Jack support, we have 427 to the 426 area. Queen support, 425 to the 424 area. And then our king support, 423 to the 419 area. Now, for the main thesis today, it is bearish, closing below the 429.7 with a projected target low of between 427 and 422. The alternate thesis is bullish, closing above the 429.7 with a projected target high of between 428 and 434. The current major channel we are in is 425 to 453. I made a comment yesterday on Reddit that we were close to getting back to a leftover imbalance from last Wednesday, and that I am of the mindset that once we get that, we start the process of a larger pullback. Also, I want to get you to focus on the major channels. Again, the major channel we are in is 425 to the 453. Now, I believe at some point between now and Friday, we're going to break the lower edge of that channel, that 425. We're going to break below 425, but only briefly, and we're going to come back into this channel. And what that sets up is, I used to make this analogy of how when the water's cold, like when you're at the swimming pool and the water's cold and it's your first time getting in, you kind of go tap your toe in to see how cold it is, and then to just go ahead and get it over with. You run back as far as you can, and then you take a running start and jump and just kind of force yourself to get into the, water, no matter how cold it is. This is going to be kind of the same setup where we briefly touch into that lower major channel, come back up, take a good run deep back into this major channel that we're in right now, and then Monday we make that full splash down back into the lower channel. So that's kind of how I see things playing out. With that, let's get into the scenarios of the day. All right, our first and most probable scenario is going to be our trend day down. As you can see, we have a rather large gap down pre-market. I don't think that'll change, but maybe retail sales or numbers could give us a good start trying to run back up to close this gap. But however, once we get to the cash open, we start with a pop back toward the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the morning. A majority of that downtrend has already been done for us in the overnight session. We find our midday chop around either the possible queen or king support area. I want you to be very careful because the gap is so large that it could feel like an uptrend day just trying to fill the gaps. Another thing that'll be interesting to see, I just said something about us kind of touching the toe or dipping the toe in the lower channel. That could possibly happen today. If it does, it could be something like this where we get it in a sharp V reversal off of it once we do. So be careful on that as well. But that is our trend day down structure for today. Alright, our second most probable scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and then find midday chopper around either our queen or king support before spending the same energy we used going down to come back up the second half of the day. So that's our rounded reversal day type structure. There's also a vice versa warning on this because it could also start us off pretty much like this, where we get a continued push higher off the cash open. Find our get that continued push higher toward our jack or queen resistance level, and then find our midday chop either around that jack or queen resistance level, and then we end up coming down the second half of the day with the same energy we used going up in the morning. So that's the vice versa warning on the rounded reversal day type structure. Alright, last scenario is our expanded range day structure. We could look to set a decision area high boundary around the jack or queen resistance area before chopping back lower on the day. And even if we chop lower on the day, it is still possible that we come back up and kind of make our way or chop back higher during the second half of the day and kind of push the boundary that was set earlier on. So that's our expanded range day structure. I hope this helps. Times like this, I try to start playing chess and looking for things to set up things a little further away so that I'm prepared and I know how to position myself for things that I believe that are coming later down in the week. So again, the most important job as a trader, I believe that is protecting the capital that you already have, and we do that by understanding and knowing our risk and managing that risk according to our account size. I will close out today as always, wishing you a positive trading day. Have a great one.